Yo, what's going on? It's your boy Chike Investing back here with another daily review of NQ. Okay, we're going to be going over, NQ had a massive 1,000 point drop today because of FOMC. We're going to be going over a high level top down analysis market review where you could have learned how to navigate in this trading environment. Some of the times, like, when we trade the ICT-22 model on this channel, a lot of times you can actually catch really, really, really good trades, really good shorts, very obvious shorts in this particular market. And sometimes you can get burnt if you're trying to do longs. And also, pre-FOMC, price action tends to fall off considerably. So you need to be a little bit more forgiving on your entries. And so, we're going to be going over how to kind of navigate these markets. How do we trade NQ futures on days like this. And we're going to start off with the daily review. We're going to start from the daily candle all the way down to 1 minute. And we're going to be talking about the ICT-22 model as well. That is the trading entry model that we use on this channel. I'll be teaching it to you how you could have used it today to make money. If you like what you're hearing so far, press that like button. That's what it's for. Appreciate you for pressing it. You the GOAT. Also, press that subscribe button as well, so you don't miss a single video, don't miss a single review. Press that notification bell so you get every video. Make sure you're watching it because over time you will learn a lot on this channel. I can promise you that. Okay. And then lastly, join that free Discord below. I talk about bias and all that. It'd be cool for us to connect. Ask me some questions and we'll go over it. All right. So let's start with the daily candle. Right. So here I'm actually going to go on the replay. Go down here. All right. So here on the daily candle, let's start here. Daily candle, mad drop, large drop. All right, mad drop. Okay. And yesterday, what did I talk about? Right. So yesterday's FOMC. But if you're watching this series, go back to the last video. Remember when I said this? We had an inside day candle, right? So this candle is called a volatility filter. So the next candle is going to tend to be explosive, right? And so a volatility filter is basically the candle that represents the first candle that represents itself as an inside day after an expansion day, right? So you have this daily candle that expanded. The next day did not take out the previous day high or low. And typically when that happens, the candle after it will typically take out either the candle's low or high. And when it takes out the low or when it takes out the high, it'll typically take out this previous candle's high or low. So for example, you saw it take out this low and then in the same day it took out this low as well, right? It's going to be an explosive candle. That's why this is called a volatility filter. It's basically telling you, hey, I'm probably going to be volatile the next day. If it is not volatile and it stays inside the range of this candle and it does not take out, it can take out the lower high of this, but if it does not take out this candle's lower high the next day, then we're going to be consolidating for a schminute. Okay, right? That's something you should go back test. I teach on this channel all the time. Probably my fourth time showing you guys the scenario happening and playing out, even calling it beforehand. So, in this series, make sure you start from the beginning of the series and watch every video. Promise you will learn so much just from experience. It's basically like, a mentorship. Now let's continue here, right? So, ended up taking out the previous day low. We took out this, the daily candle's low. Total 1,000 point move today. Let's get into lower time frames. On the 4 hour, what do we see? Right. So on the 4 hour, right? During Asian, we whipped into this daily FVG, BISI, right? And let's just go on the daily so you know what I'm talking about. It's this candle's high to this candle's low. It's just body. That's what we call a fair value gap. That is a PD array that you need to keep on your charts. So you can see that we whipped into that, right? And you can see that we're rejecting from that. And then also on the 4 hour here, we have this FVG BISI as well that price wicked into as well. And I believe we only came to the top half of that constant encroachment. Let us quickly check that out. Right here. Okay. So here on the 4 hour BISI, you can see that right here on this candle overnight in Asian, we are wicking into it and then immediately rejecting higher from this daily BISI and 4 hour BISI. On short time frames, these are where you're going to find really good longs, right? Because it's a very sensitive higher time frame FVG. So on a 1 minute, 5 minute, 10, 15 minute, you can see really good longs heading higher, rejecting from that, right? And you can see we rise all the way, in London and make a high, coming into that pre-market session, and then run lower, revisit this daily VISI and 4-hour VISI again, but then we chop and come back higher, immediately rebalance to this bearish order block on the 4-hour, and then explode lower, right? So price actually went like this. It came back down to this wick and then went higher, right? And touched this bearish order block, but then came back in the range. So the next candle, when that happens, when the price rejects from this bearish order block and comes back and closes lower, this is a doji candle, and I'm anticipating price to run lower, right? Going into FOMC, that could have given you a tip that FOMC is probably going to shoot us lower, right? That typically happens. You know, a lot of times, like, you can tell what's going to happen when news comes out by the way that order flow is going. You know, just watch that in the past. You'll know what I'm saying. Because at the end of the day, you know, people who are releasing these statistics, I'm pretty sure, I mean, they know exactly what's coming out, right? And smart money, you know, the algo, it's already in there trying to manipulate price in a certain way. And so if you know, but that's also, if you're not confident about where price is going to go, it's really going to be hard for you to catch in, you know, news scalping kind of trades. Anyway, so price expands here, runs lower. In the morning, admittedly, I was bullish. I did want to see price run higher and take out maybe this high and this high. But we ended up getting the opposite of that. And that's just because this candle right here, after the 10 a.m. Going into the 2 p.m. close of this candle, price rejected from here. And that made me switch my bias on the day, right? So you have to be flexible. Like, I had a bullish bias because we were reacting from these levels. But once price starts to give you bearish price action on a higher time frame, you have to be anticipating what is the next candle likely to look like. And the next candle is likely to look bearish. So that's going to change my bias for the day to now be on bearish signals. Okay, so on the 1 hour, what do we have? 1 hour, we take out these equal lows, right? By the way, look at this equilibrium level that I highlighted yesterday as well. That's the equilibrium level between this low and this high. You can see that we're hovering on top of it as it's a PD array, right? So that's why it's a good PD array to keep on your chart, because you could be finding some higher resistance there to run lower. It could actually be supporting it and run higher. So you can see starting at 6 p.m. last night, we start rising higher. We create this bullish fair value gap during the Asian session and then run higher. We end up taking out this high from the AM session yesterday. And then, you know, that happens at 7 a.m. and then we run lower. I believe, is that 8:30 news today? Wednesday? Yeah, there was 8:30 a.m. news, building permits, right? And so price ended up running lower during that 8:30 a.m. news, making this large 1 hour fair value gap. And, you know, we now wicked into this daily BISI and then started heading higher. Once we wicked, you know, at that daily BISI below and the 4-hour one as well, and started rejecting higher, especially with this nice rejection candle that was an up close going into the FBG. I'm anticipating a really sharp and deep retracement. So let's say, for example, you're trading a 22 model, right? Which is the 22 model is this low, high, break a mark structure above this high, comes back into a fair value gap, or it stops at the breaker here or an inversion fair value gap and runs higher, right? And so let's say price is going down like this. We end up purging liquidity below this low, and then we break market structure, go higher after reacting from a PD array here, or price could be trailing higher here, take out a short-term low, and then continue. This is what we call a continuation purge. So that's a 22 model entry. And so you can see here on the 1 hour, maybe we have this low, we have this high right here, we have this low, higher high that takes out this liquidity, reacting from this bearish order block on the 1 hour, and then runs lower, creates this fair value gap, which price retraces into, and then shoots lower. That's a 22 model. So if you are a 1 hour trader, right, if you're taking trades on a 1 hour, that would have been a good 22 model for you to take. But you know, that's only if you anticipate that price is actually bearish, and that would have had that. I wouldn't have had that bias until about 2 p.m. You know, at that point, you know, that 4 hour candle would have closed in a bearish fashion, and then you can actually start taking that short, because up until here, price is still showing you bullish order flow reacting from these discount levels, and you still have these you know, LRRs above here and here. So you need to be patient to have a really, really concrete bias. Plus you have these relatively equal lows right here, right? That price can still come back and tap. So price ends up consolidating, you can see, from the 10 a.m. hour all the way until about 2 o'clock. And this is when FOMC came out, right? So what does this tell you? That pre-FOMC, price is actually moving like garbo, and you should be out of the markets if you are not experienced, right? So, you know, I took a tiny loss today, you know, pre 2 p.m. and then I ended up taking out another pretty decent loss in the afternoon. But I'll go over those trades, and then, you know, we'll learn from them, and we'll just keep going. And then you can see we ended up running all the way through all these relatively equal lows here to the left, right? Slamming through the new week opening gap. There was also a daily volume imbalance, which is this green candle here, and it's this 1 hour fair value gap. Price, as you can see, literally slams through it. and ends up making a low at about 4 p.m. For retracing higher to some of this range. And so, what do I anticipate for tomorrow? I mean, honestly, who knows? Like, this is ridiculous. Price could come back to the equilibrium of this and then continue to run lower, or it could stay in the lower half of this 1 hour FEG CIVI and continue lower. Or price could, if people feel like they sold off too much and actually want to end off the year bullish, which typically will happen in December, I wouldn't be shocked that after taking all this liquidity over here, that price could run and take out these relatively equal highs before the end of the year, right? So let's just continue to go down time frame here. Here on the 15 minute, right? Oh, that's the 115 minute. Oh. So on the 15 minute here, new day opening gap forms around here at 6 p.m. ends up wicking out these relatively equal lows, straggles higher, right? Short-term purchase liquidity here at the end of the London hour or around 4 o'clock, right? Taking out these equal lows, but continue to run higher. This is a continuation purge like I was talking about. We're running higher, but it ends up taking out a short-term low to run higher, which is why you need to have a bias and understand where price is likely to go before it returns. Price ends up wicking above here, runs lower at that 8:30 a.m. mark when that news came out, right? Notice how price was not really moving until news came out in the morning. Price runs, and then we end up wicking lower back into this daily FVG and into this 4-hour CIVI, creating a nice rejection candle wick. At this point, I saw a nice 22 model buy that I honestly should have taken, but I didn't because we had 10:30 a.m. news, and I just couldn't see a good entry to get in. Once we got about here, ES had actually done a really good job of coming back up to this high at 7 a.m., already taking it out. So at that point, I was actually anticipating us most likely being able to take out this high as well because I had a bullish bias and that maybe NQ was playing 6 there, but it actually ended up being SMT and running lower really aggressively. Right, so there was SMT at these highs with ES, and so when you're navigating these markets, you need to understand what's happening, like on a high, like you need to understand bias, context, what's likely to happen based on scenarios. You need to be flexible, right? You may have a bias going in, but then it's proves to be wrong. Get out of the market until you see what the clear bias is again. And so I started seeing shorts being the bias, and that's when I decided I'm going to take some executions. Now, plus, at that point, if you're taking one loss before the 2 p.m., like before FOMC, I don't want to take multiple losses in one day. I can only take 2 losses. And so, I know that there's going to be some nice price action after FOMC, and there was plenty of trades that we could have taken. We'll go over those in a second. So price runs lower, and then creates this large gap at 2 p.m., right? And typically when that happens, if price is not showing a willingness to reverse that and be a Judah swing, it's just going to continue, right? So price ends up immediately rebalancing, and then running lower, continue to make new lows, filling in this new day opening gap from last Friday or last Thursday. Huge new day opening gap with relatively equal lows that are order pairing right here on these new day opening gaps. What an order pairing? An order pairing is basically when you see liquidity that is nested inside a gap or an FEG. And so this is relatively equal lows. So these orders are being paired with these inefficiencies, right? And so it's very, very strong magnet. Price runs right through that, fills in this whole new day opening gap, also fills in this new week opening gap from the new Monday opening gap right from this week. So basically this was Sunday's close to Monday's open. Price ends up filling that in as well. And then also this huge opening range gap, right, from I believe from this past or from last Wednesday that had been left open. And then also another huge opening range gap from the Wednesday prior. You can see all that got filled literally in one day. Very, 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 very voluminous price action. We still have an old opening range gap that had not been filled from a couple weeks ago that I'd like to see us maybe get to at some point if we're going to continue bearish. But either way, actually, let me. That got filled. And so you can see price ends up just making that huge run post 2 p.m. And so in this, there are plenty of shorts, right? We're seeing this huge gap that's being formed at that 2 p.m. FOMC hour. And because it's not a Judah swing, there's only 2 things that can happen at FOMC, right? You can have a Judah swing and then retrace and run higher, or you can make a big gap in the beginning and then just continue in that direction. So if you see no willingness to Judah swing and go back higher, the bias is shorts, right? The bias is continuation of that FOMC move. We end up making the low of the day at that 4 p.m. hour, and then retracing higher overnight. Let's continue here. So let's kind of jump forward all the way to the 9:30 a.m. open. So at 9:30 a.m., you see we make this low. Let me actually put on the, I don't think I put on the RTH for today. Give me a second. At 9:30, right? 9:30. All right, so yesterday's close to today's open at 9:30. Open, yesterday's close. This is the opening range gap. Acts like a PD array. I want to see that get filled. So you can see as soon as we open, runs lower, comes back and taps that 4 hour FEG as well as the daily BISI. Takes out all these relatively equal lows. You can see that even on the RTH screen. So that would also be some targets for you to take out, for you to look at. And then within the first 30 minutes, opening range gap can get filled. So a lot of times that's how I know that the morning is not going to be like a very expansive morning if it comes back and just fills it. Like a lot of times you'll see expansive mornings if we just continue to run lower and it does not fill it. So we came back and filled it. So we can either be reversing and going higher, right? Or we can just stagnate for the rest of the rest of the session, or we could reject from it and run lower. But that's how I know that we're probably just going to have some pretty regular movement and not super expansive movement. And then let me go back to the ETH screen. Let's actually go back to the 5-minute. I just wanted to set that opening range gap. So you can see price comes, rejects higher after touching these levels, finds support on this equilibrium level right here on the 1 hour still, relevant PD array, ends up running higher, gets this 5-minute FEG CIBI, can't make it above these relatively equal lows, highs, even though ES did, and then runs lower, creating a nice 5-minute 22 model right here, higher here, low, higher high, break a market structure below these lows, comes back into this fair value gap, consolidates for a long while because we had that 2 p.m. FOMC. So even though we had this, I'm really not going to be taking anything because I want to be super clean, very quick scalps, especially on the 1 minute, not on the 5-minute pre-FOMC. You can see that from about 11:30, the lunch hour kind of kicked off early. From 11:30 all the way until 2 o'clock, trash. At 2 p.m., price runs lower, creates two large gaps, reprices into it at 220, 225, reacts off the low of this 4 hour fair value gap, runs lower, creates propellant bullish order block, right? So, sorry, bearish order block. So one bearish order block here, second one here. So that's a propellant. Price runs lower. Essentially continues to run lower until about 4 o'clock, right? You had a small retracement here at 345. And honestly, I was telling my Discord I would like to see from 315 to 345 at some point you get a retracement back higher. Now I thought we were going to get it a little earlier, around that 315 mark when price started to run up like this a little bit. But you know, something you have to keep in mind is that one, if FOMC is gapping lower, then you know that like the bias is bearish. Plus, like, you know, think about why price is falling here. Like the Fed kept rates the same, and everybody has been pricing in lower rates, and so that's how the market has been running higher. But then if FOMC is saying that, oh yeah, we're gonna keep rates the same, and hey, like we're probably gonna keep it the same for a while until we see good data to run it lower, they're probably taking their foot off the gas, and so that's gonna make the market reprice, and the market's gonna be very heavy, right? It's not gonna be very easy for it to run higher. So you want to be super convinced that price is running higher. Shorts are really the best bet, especially if there's more inefficiencies to go lower, right? That are just in an easy place. Plus, there was like some liquidity, I believe, here on the 1 hour. Yeah, below here, previous week low. It's actually previous week low, right? That was still in our wakes, especially as price was falling. So, you know, you just want to like zoom out and really think about where is price likely to go, right? Before I feel any willingness for price to run higher. You can see price actually runs higher because we've taken out that previous week low right here, which is this yellow candle, and we filled in this opening range gap. We've come back to this old, I believe was the 4 hours IFEG CIBI from a while ago that I kept on my charts. And so there's a lot of reasons for price to retrace, but let's go on the 1 minute here real quick and just look for any good 22 models that formed in today. So The first one I want to go over here is pretty half decent 22 model right here. Low, high, lower low. Very good market structure. For value gaps, retraces into that, runs higher. That's one. And that's in the 950 to 1010 macro. And you have this 9:30 a.m. high right here that you can take out, as well as all these relatively equal highs that ES ended up taking out, but NQ couldn't get there. A little bit sluggish. ES was not sluggish. We have another 22 model here. Low, high, lower low, higher high. Break a market structure above this high right here for value gap. Price retraces into it, comes back to this volume imbalance, runs higher, right? Here, I know they're going to have high resistance trading conditions because the FOMC is coming at 2 p.m. So I'm leaving my stop here and I won't move it until we break market structure higher. That is when I'm waiting to just take out my full stop. I really don't care. I just want to be very confident in my bias. Price continues to run higher. And we don't really get another good 22 model here. Price makes this high at 1050 and then starts running lower, right? Low, high, high, low, higher, high. Break market structure for value gap. You can see price is starting to now run lower. So there's SMT at this point with ES, and there's this break of market structure lower here. Honestly, I did not see this. I was focused on taking long because I was really, really sold on my bias to come up higher. But that's SMT with ES. So you got to be a little bit careful. Price can reverse at that point. And you just got to be careful. And so price ended up reversing on me. Because I took an IFVG long once we broke through this. I just took it on an eval account. Like I don't really trade IFVGs, but I just wanted to play around with it, and I ended up taking this out, inverted this, and I wanted to see us take out that. Let's come higher, but it was invalid because of that ES SMT. Price ends up breaking market structure below this, retraces back to this breaker, and then shoots lower, and then comes back into the range. Right, very typical of FOMC mornings. Right. Not really expanding anywhere, right? What high, low, high, like these are conditions you don't want to be in, right? You want to be expanding somewhere. So price ends up running at about 11:30, quality falls off, and then here, price expands lower at that 2 p.m. Low, retraces back into this CIBI, runs lower. At this point, you're super confident that price is going to be bearish for today. And also just keeping in mind the news. We have a nice 22 model here. So this is where you can get caught offside. Now, this green box here is a daily volume imbalance. We still have that new day. We just keep in mind, we have tons of levels below that I've already gone over in previous time frames that need to get retraded to. And it's not, and like we haven't yet, right? So when you see a 22 model long like this, right? Low, high, lower low, higher high. Plus we're visiting back to this 4-hour IFVG. Do not take these. Do not take these. Like, wait, like when you see prices falling like a sword, like you should not be trying to catch that sword. You're gonna get cut. All right. And so price, as you can see, it fails there. At this point, when you see this and you see that failure in a very heavy market, this is a very, very easy 22 model to take. We just came to daily volume balance level. Plus, we took out the previous day low here. We're revisiting a 1-hour BISI. You can anticipate a really sharp and pretty half decent reaction. So you don't want to really set your entry here at this FVG. You could at least set it at this point. If we're reacting from a level like that, I'd set it around the 50% equilibrium level. So your entry would be here. Keep it above here. And then honestly, I would aim for like a very, very like high degree achievable target, right? Like on these kind of days, like I'd probably take out like most of my trade at 1 to 3 and then leave a runner to just keep going to see how far it can go. And on days like this, when you leave a runner, like you can make tons of money. Like that was 1,000 NQ point move. Imagine if you held 1 micro, right? Like that's a stupid amount of money. Price, runs lower, fast, keeps running lower, runs lower again, runs lower again. Where's the next 22 model? Right here. So this is actually where I bought because we came through this opening range, we had consequent encroachment. We filled in that new day opening gap from last Thursday. And, I honestly didn't see that previous week low. I didn't see it right here. Very stupid of me. And it's just very foolish of me. Honestly, I could have done better today. Low, high, lower low here. Break a market structure for value gap. In between that 315 and 345. Oh, let's go quick. So low, high, lower, low, fair value gap, break market structure, fair value gap, retraces in here. I think your price can run higher, but you know, same rule that I just came up with that I didn't even follow, right? Price runs lower. At this point, I know that, okay, we've not finished going lower yet. We set that previous week low intact. Like, let's make sure that I can try and get back in this trade. Price runs low, has this high, taken out by this high, break market structure below this low, right? At this point, it's a stop out, but because I know that my bias is wrong and it's actually still bearish, I can get back in. But I wanted to see us come back to this fair value gap at the very least. You can see we did not do that, and price continued to run lower without me. So I did not get an opportunity to make that money back. But you can see we take out the previous week low here. We have this low, high, lower low, break market structure, and then a bit of a run higher, but you can see even that it still fails because the market is just very heavy. So on days like this, I wouldn't really be looking for longs anyway, especially when there's a really, really huge macro like reason to continue running lower. But anyway, hopefully this has been helpful. Make sure you press that like button, subscribe, press that comment, leave a comment below if you have any questions, and I'll see you guys in the next video.